Hello, everyone. It's Michelle Brienza, your trusted mortgage agent. As you know, I have been working by referral only for the last 27 years, and I've seen just about every rate cycle that there is now. So today, I wanted to talk about something that's even more important than rates. Let's talk about policy. And more importantly, how does policy directly impact mortgage rates? And a lot of people don't want to talk about politics, but the truth is that mortgage rates and inflation, they wash each other's hands. So it's important to understand policy, because when inflation goes down, mortgage rates usually follow. When inflation becomes sticky, so do the rates. And on July 31st, both the Bank of Canada and the Federal Reserve are both going to be announcing rate decisions. And so what does that mean? Well, there's two things that you want to watch out for. They're going to be weighing in on whether inflation is still a problem or not, or is it finally under control? So it depends on who you're listening to. But today, let's break that down, because I thought it would be useful for a lot of people who don't understand what's going to be coming down the pipeline and how that impacts mortgage decisions that you're going to be making. So let's start with the US and let's talk about their market a little bit. I'm going to get a little technical, okay? So just bear with me. The market is betting that inflation is still going to be a concern, and that's why Jerome Powell, who is the Fed chair, he's signaling a little bit of caution, and he's taken that stance. But headline inflation was 2.4 in May, and it's expected to rise to 2.7 for June. Core inflation that strips out like food and energy, that's forecasted to be at 3%. That's without food and without energy. So these are not the numbers that you want to see going up if you want lower mortgage rates. And because the Federal Reserve's target is 2%, if inflation is above that, then rate cuts are pretty much off the table. And yes, tariffs are playing a role, believe it or not. The US is collecting, I think it's like record-breaking, some import duties of over $27 billion. And of course, businesses are passing those costs on to consumers. And that, in about a year from now, is going to create more inflation. So that's what they're expecting. So now Canada. Okay, so here's what's happening at home. It's a little bit of a better picture. Headline inflation in Canada is forecasted to be at 1.9. And that, of course, is below the 2% target rate that the Bank of Canada has. But when you dig a little deeper, core inflation is still at 2.5. Remember that stickiness that I was talking about? And there's this thing called the CPI trim. And that is also something that the Bank of Canada is watching, and that's at 3%. So, you look at these, and that's where the rubber meets the road. And if those numbers don't drop, then the Bank of Canada might pause rates, or, like the US, will be more cautious. So what does that mean for you? I mean, at the end of the day, so what that all of this stuff is happening? So whether you're a homeowner, whether you're a first-time home buyer, or you're an investor, these numbers do actually affect you. Because if bond yields, which drive fixed mortgage rates, they move based on inflation expectations. So what does that mean? So if the market expects that inflation is going to stay high, then bond yields actually go up, and then so do mortgage rates. If inflation comes in lower than expected, then you can expect yields to drop. And if that happens, then we could see rate cuts coming. So this is why we pay attention to these numbers. So it's all about what the market has already priced in. You and I don't control that. And that's how actual numbers surprise or disappoint the markets. That's when you hear, oh, we've got a surprise, or the markets have disappointed us. So what's my role in all of this? My job is to make sense of all of the noise, to look at the policy, look at inflation, follow rate expectations, so that you don't have to do any of the guesswork. And whether you're coming up for renewal or you're thinking about buying, because there are some great opportunities, or you're just wondering, should I wait or should I purchase now? Just give me a call and we'll figure that out together, because this is where I start to customize those things. So if you're a real estate that's watching this, or if you have clients that need a little bit of guidance, I'm happy to help out. I'm always happy to give that 15-20 minute consultation and sort of help them navigate. But if you're a client who's watching this or someone who's interested in purchasing a home, I offer a free, no obligation 1.5 hour consultation where I can map out all of your options, and I just want to be able to take a look at your documents. So, policy does drive rates, and I think that when I understand that, I can help bring some clarity to your situation, which will drive appropriate action. So, all of that being said, I just want to say thank you if you've gotten this far to watching this. I know it's a lot of information, but this is what I'm truly committed to, is making sure that people understand all these complicated concepts, and so that I can just break it down so people can make confident decisions, because there's a lot of great opportunities out there, even though sometimes it sounds like I'm talking like the sky is falling, and in some areas it actually is. So let's see what we can do to help people move properly, because being in paralysis isn't going to help anything. Have yourselves a great week, and until next week, be well.